Hello, and have we got news for you heading into Christmas Day weekend? Because Christmas is Monday, so Merry Christmas to all. But China might not be giving us a good Christmas because they're trying to ban crypto gaming coins. Well, I mean, technically, crypto is not allowed in China, but they want to ban on converting game tokens to fiat currency, which would destroy the Chinese market, which is a gigantic market for crypto gaming projects. They've just proposed it, they haven't done it yet, but once the administration proposes something, it's very likely to actually get done. So it's part of a huge set of guidelines that contain 62 different articles and covers a wide range of topics. And of course, the article that we're interested in is Article 23. And it intends to ban the use of game tokens to buy physical goods, like oranges, exchanging them for products and services of other units or legal tender. So you cannot trade in-game cash for actual cash. That will be illegal. Remember, China's already trying to restrict how much kids can actually play games on the internet over a week. I think it's a couple hours a week, besides professional gamers, of course. And of course, there's a lot of speculation on why this is. Obviously, China's really trying to get their younger people to work agriculture or manufacturing, which, by the way, no one wants to do. They might have to go into AI for that because college educated kids do not want to go farm or work in the factory with physical labor. So I think, they're seeing, these kids are playing too many games. They need to get in the farms, get in the factories, and do physical labor for the glory of the country. And the kids are like, nah, I'm going to pass on that one. So, besides this, it also restricts game providers from offering induced rewards, such as airdrops or incentives. So essentially, you can't do like daily registration bonuses. So it takes all the profit potential of in-game currency out of the games, and of course, it basically doesn't let you buy actual goods with game money. Now, how they actually going to enforce it from door to door, I'm really not sure. That's kind of strange. Oh, by the way, China has these funny rules that don't allow you to insult Xi Jinping or call him names in any way. One of the nicknames that Xi Jinping, some of the names that Xi Jinping is called in China, is like dumpling and teddy bear, and those are now illegal. You cannot call Xi Jinping in public dumpling or teddy bear, or you will be thrown in jail. Of course, the guidelines for this obviously were published for public consultation and do not hold legal force yet. The deadline for consultation is January 22nd, 2024. Now, I think this is fairly likely to pass. There'll be some pushback on it, but once the administration in China wants to do something, they can generally do it. So this could be a definite blow to crypto gaming tokens, looking at that sweet, possibly awesome market in China. And this is also why Tencent has actually gone down recently, because of these new proposed rules that will cut directly into their business. So unfortunately, this is not a very good news for crypto gamers that wanted to make money off of gaming, or or companies that wanted to get into China, maybe like GTA. You can't really sell fake money to 8-year-olds anymore. Well, you can, but they can't use that fake money for other things. So they're really trying to nip crypto gaming in the bud with this game currency to fiat tokens. I don't think it's specifically targeted towards crypto because there's Riot Games, which is owned by Tencent. There's GTA 5 where you can use fake money. They're not really cryptos, but it does put a cap on crypto gaming tokens as well. So not a very, very good outcome for crypto. The SEC has apologized and says they're very sorry for giving false and misleading information to try to win a lawsuit. The judge threatened to sanction them a while ago, and agencies like these things were not done in bad faith, and we made an honest mistake, so they should not be sanctioned. I disagree. Now, the lawyers not being sanctioned, I can live with that, but you cost this company millions of dollars with false information. So at least the punishment should be that you have to pay the company X millions of dollars for all the trouble you've caused them, plus all the time that you've actually wasted them. Now, I think this should apply for any government lawsuit where the government loses completely. It's not like a split ruling, but they just lost because especially if they submitted bad and false information. Now, in the Ripple lawsuit, because the SEC actually won a partial judgment on that the fact that the sales to institutions were securities, they wouldn't actually have to pay for this. Same thing with the LBRY lawsuit, they wouldn't have to pay for that. But in lawsuits like the one like this one that they're actually like apologizing for, I think this was like Debtbox. They basically wanted to sue them over something that they reportedly had false information on. And that obviously, like, I don't really believe when the SEC says it was done in good faith. I think it was actually done in bad faith, honestly. I think the SEC policy has always been a policy of bullying companies, and this is just taking that to the extreme. So I think there should be punishments. But at the very least, they should have to compensate Debtbox for both the time and their legal fees, because you just basically, like, made the company run up a huge amount of legal fees. So you should have to pay both sides legal fees and basically compensate them for the millions of dollars you possibly cost them with this lawsuit in cases where you completely and utterly lose, especially when you're submitting bad information and the court finds out that you're submitting bad information. That should be a legal punishment, and that hopefully would bring in the SEC and stop them from suing everyone just because they might have to, like, pay those fees. Now, and the fees should have to be paid out of their treasury, so they have less money to actually go after these frivolous lawsuits. And yes, I said it, I do think many of their lawsuits are indeed frivolous, and they're just trying to bully companies into submission. Solana has secured another victory. What I'm talking about is Solana version of USDC has been approved in New York. Why that's important? New York is the financial capital of the world. A lot of money going on there, and now people are really complaining about Ethereum transaction fees. There's a reason why Ethereum Tether transactions all moved over to Tron about a year or two ago. I think that's kind of stopped now, but USDC, I'm not really sure if it's on Tron, but now they have another option in New York that's not Ethereum with Solana. And Solana continues to gain users with the airdrops and their very friendly UI. Plus, they are very fast and their fees are very cheap. The test for Solana is, can they actually stay upright and not go down multiple times during the next bull run? If they do, I think they will gain a lot of trust. If they don't, well, then they have other problems. So I do think Solana has a big chance of actually catching somewhat up to Ethereum if they can actually maintain to stay alive and not go down next year when the bull run actually comes. Gain a lot of trust in the industry and have people just switch over to Solana. But it is yet another victory for SOL over Ethereum, and I think Ethereum can start feeling like other blockchains are starting to creep in on their territory. So yes, it has secured another victory, and very good news for Solana investors. Today's market's PCE numbers, basically the consumer price index, not consumer price index, but like the personal consumption index, was actually at 2.6, which means shoppers and consumers consumed 2.6 more than last year. Now, if you adjust that for inflation, because inflation was 3.2, they actually consumed about 0.6% less. So basically, if they were spending $10 last year, they're spending $9.94 this year. This is actually really, really good for crypto, because the fact that they're not spending more means that the Fed's interest rate hikes are actually somewhat working. So the Fed doesn't have to further increase interest rates, as their policy right now is already repressive enough to where people, when adjusted for inflation, are spending slightly less. So that will combat inflation, but the decrease isn't really significant. So it does not mean the economy is actually going backwards at this point. So, I think it's the best of both worlds for crypto. The lack of rising of interest rates obviously helps crypto, because people are less afraid to actually borrow money to actually spend in cryptocurrency. Plus, we have the so-called 3 rate cuts next year, probably beginning in the middle of the year, obviously. But also, you have to realize that the economy is really not that bad, because even if adjusted for inflation compared to last year, we're still spending about the same amount, 6 cents less per $10. Not really a big chunk, and that's adjusted for inflation. So you're not saying they're spending, they're spending just a little less, but if you adjust it for inflation, they're spending way less. They're actually not spending any less, just 6 cents per $10. And inflation honestly has not been bad this year at all. Most of the inflation was actually last year where the prices grew. Inflation, like prices have actually remained fairly stable since the beginning of the year. Gas has actually gone down significantly since the beginning of the year, but other prices have actually remained fairly stable. So economy is doing good, but not good enough for the Fed to lower rates again. So that's a big win for us crypto investors. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.